This is Sam Putnam.
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 There's one stock that is OUST, Ouster. It's a LiDAR stock. It's partnering with AI companies. It's doing data threat detection. And it recently had an agreement with the Department of Defense and an approval to be used in unmanned aerial systems, which is huge considering the hundreds of millions of grant potential that could come out of such a collaboration. So let's jump into the chart and make sure we're buying this at a time that makes sense, even if we know nothing about what I just talked about. And then we'll jump back into the value investor stuff, so we make sure if we don't look at our portfolio for a couple weeks, we don't feel like we're going to get completely smoked. All right, this is not financial advice. Let's take a look at this partnership and this chart, okay? This is the partnership on June 11th, approved by the Defense Department for unmanned aircraft. And here is the chart, okay? This is June 11th. You can see that move since that date. And this move is based off of those Q1 earnings in May. Now, if we zoom in even more, why right now? Well, it looks like it's coiling up and it's going to keep going up. People call that a flag, right? I don't get too focused on using the word flag, because if you start using the word flag, you start seeing flags everywhere. And what we're trying to do is find just a few stocks each day that are the best in the entire market, based on not only what they look like, but also based on them being in a sector, a category that is attracting attention. And AI, more specifically LiDAR, which is used to collect data through these sensors and then used in processing algorithms. For example, reinforcement learning, which is a new application in self-driving cars. Previously, we had neural algorithms, machine learning, deep learning. Reinforcement learning is more recently being applied. And that's why this is a more recently interesting company, ticker, stock. Back to the chart. Chart looks good, right? You know nothing. The chart looks good. That's, of course, how I started looking at it, was not what it did, but the chart. And there's a pretty clear spot to buy at over 30. There's another spot at 32.5 and another spot up here around 35.36, with the high being 36.25. On a broader numerical estimation, you risk a buck, you make 10, right? That's kind of the idea. And if we zoom out, is 10 possible? I think so. It's certainly gone down a lot. And every stock went down in 2022 right here. But essentially what we're trying to do is get back up to 10 bucks higher, which is about 42 from 32. This is so far back, there's unlikely to be much resistance there, because these guys will already have sold down here. And then from there, you have a lot of sort of blue sky, considering that, again, this whole segment of buyers and sellers is not really holding the stock anymore. People were holding the stock who bought down here, okay? So when everyone's making money, that's good. And that's why there's a lot of gap fill potential, which isn't really an accurate term, because, again, this is actually only visually relevant. There's actually not going to be resistance there. Of course, when something's visually relevant, it sometimes does lead to resistance as a sort of self-fulfilling prophecy, as traders, investors do see that back there and act on it. So look, it's in a good spot. They do AI sensors. Autonomous driving is slowly becoming a reality. It's a hot sector. We can jump a little more into what the heck this company does. Of course, there's a lot of different applications for LiDAR, GIS mapping. It could be used for stuff like Google Maps or defense applications, of course, and then like remote sensing, and like difficult, hard to reach environments, glaciers and all that stuff. But really, we're talking about weapons, right? The military as the biggest funder of this type of tech. And look, they are going to be used in robots as well. There haven't been any huge agreements with humanoid companies. This is a company they merged with, VLDR, and there is another company, LAZR and INVZ as well, which are relevant peers. So that's what these guys look like. None of these stocks look particularly, INVZ actually looks like it's slowly building out a long base. I don't know when this is going to go. It could be a while. But I do think that Ouster looks the strongest. It's forming these higher lows, and it's had a lot of buying interest here. So those are the peers. Of course, Google's a peer, but it's not, unless there's a specific mention of LiDAR, it's unlikely the movement of Google is going to affect this LiDAR stock in particular. Okay. Now, making sure that they have some real customers, Volvo, Daimler Group, this is legitimate, okay? There are some companies that also use their sensors sort of on a second, third party capacity. And then industrial automation is another future application, with these companies being relatively unknown to me, at least, and I think to most people. But Amazon Robotics, there are some brand names that they could partner with at some point. They just have a ton of applications as a components company, a sensor company. They're hitting all of these hot sectors: drones, industrial automation, self-driving cars. Not even talking about these sort of boring, state level contract opportunities. Caterpillar, John Deere, mining. But this is really what we're talking about. Lockheed Martin, Raytheon, big subcontracting opportunities. And of course, NASA and federal agencies. So this is really overkill to say you could use a sensor in pretty much everything. Okay, that's not really fair. They just happen to be a company that is very base level. Okay. Importantly, this is what we want to know, right? Do they make money as investors? And they do. Okay, not much, but it is up. The loss is better than expected. They do have a healthy growth margin, and they've got cash. Okay, so what more can you really ask for? This was actually Q1. Q2 was up though, and pretty much similar, improving. Loss per share beat revenue, and gross margin actually improved. So this was the earnings that made it go up so much right here, which is a pretty significant, I don't know what that is, maybe 20, 30% plus revenue improvement. They did have, it seems like, healthy revenue guidance, which is about similar to what they currently have for revenue. Any risks? Well, they are unprofitable. Okay. We talked about that. Losses are narrowing, and we talked about margins and cash. Okay. So there hasn't really been any news recently, but if you do look at the chart, sometimes with these smaller companies or even bigger companies, it's not really about news always. It's about what is this chart theme developing versus a sector theme. This is a chart theme. So some of these charts might be in different themes. UMAC, another one that looks good. And then DEM. DEM is not in the same industry as OUST, but the chart looks great. Okay, so a fund could be accumulating both of these tickers based on attributes that are not totally visible to us, based on the volume, based on the price level, based on some type of weird feature, like the fact that their earnings were both narrowing losses or something like that. But we don't have to speculate. Here's a stock. It looks good on the chart. It's in a sector that's super useful now and in the long term. And if this thing helps you, go ahead and hit that subscribe button. If you want to chat about what tickers to buy, head over to stockscommunity.com. It is 7-day trial, $25 fee. Keeps the bots out, lets you try it out with a tiny piece of skin in the game. And I don't know. See if it's worth it. I will see you in the next one. And remember to hit that subscribe button if you haven't yet.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.